When we created Alignvest, our partners pooled $230 million to invest in our platforms. We wanted to create investment platforms that invest like the best institutions in the country. We created a global cross-asset class platform, and we created a domestic equities long-short platform. That's how the big institutions invest, and that's how we wanted to invest. Then we ensured we had alignment. We locked up our capital for the long term so that we were there with our investors, and we pay the same fees as our investors. That's important to us to create alignment. We want partners to be with us in our platforms as clients. So we're really excited about the quality of our teams. Our global cross-asset class platform is run by Don Raymond. Don built the institutional investing process at CPPIB.
When we first began researching how best to design the Alignvest Strategic Partners Fund portfolio, there were two aspects of the typical Canadian investor's portfolio that caught our attention. First, they tended to lack global diversification. And global diversification is important because it reduces risk. It reduces risk by country, but also by sector, because the Canadian market tends to be very concentrated in a few sectors. The second thing that caught our attention was that they tended to have limited exposure to alternative asset classes and strategies, things like real estate, infrastructure, and hedge funds. And these asset classes and strategies are becoming an increasingly important part of large institutional investors' portfolios because they have a higher expected return and can be very diversifying relative to a traditional stock and bond portfolio. As a result, we had three design goals for the Alignvest Strategic Partners Fund. Firstly, the portfolio would be globally diversified to offset the home bias we see in typical Canadian investors' portfolios, while at the same time hedging a significant portion of their foreign currency risk to manage the overall volatility of the portfolio. Secondly, we'd have an intentional overweight to alternative assets and strategies to compensate for the underweight we typically see. And thirdly, to bring the best of Alignvest, our best thinking, our best portfolio design, and our best active strategies. We are building and managing the portfolio using what's called a hybrid internal-external approach, which is common amongst large institutional investors like the CPP Investment Board and the Harvard Endowment. Our internal teams are focused on the broad asset allocation and tactical shifts using proprietary valuation models, as well as internal stock selection in Canadian equities, where we believe we have a real competitive advantage. We complement all of this with best-in-breed external managers to expand the range of value-added active strategies. Here, we like focused and concentrated strategies operating in less efficient markets. We like managers to be concentrated because we feel that aligns them with good value creation, and we take care of the diversification at the level of the overall portfolio.
Our goal with external manager investing is to identify skill-based strategies that meet our fairly lofty return objectives with acceptable risk. These strategies also have to be only partially correlated to traditional asset classes. We look at hundreds of managers each year on a global basis who are engaged in specialized investment strategies. These are strategies you would typically not find in a traditional portfolio. For instance, we would invest in reinsurance strategies, stock market activism, water rights, or even trade finance. To source our external investments, we do draw on major manager databases, but our most reliable method to tap rare talent is to actually access our extensive personal networks in the alternative investment domain. And these networks have been built up over 2 decades. To identify manager skill is complex. We apply a series of quantitative tests to break down manager returns into their component parts. We need to isolate what is true security selection skill from what might be sector timing capabilities or even mere exposure to certain macro factors. So what do we look for beyond hard quantitative evidence in a manager? Well, our managers tend to have the following 3 characteristics. They're typically very focused on their particular market niche or asset class and have built up immense expertise in that area. They also very often are concentrated and have constructed portfolios of their very best ideas. And finally, in every instance, they are very aligned with us. They have typically invested a lot of their own money alongside ours and yours. And that's how we know that they're seeking to generate the kinds of returns with risk management that we want, and that's because it's also what they want.